Balance sheet. Balance sheet, as we all know, it is a statement where all the financial position of the business can be easily known. Okay, and here this is just similar to a trading concern like profit organizations only. So here also we'll enter all the liabilities on the left side and also the assets on the right side. Okay, so again here there are certain important points that are to be considered when we prepare the balance sheet for not for profit organizations. In that, the first one, capital fund, which is also called as general fund or accumulated fund, is as usual taken to the liabilities side. And if there is any surplus in the income and expenditure account, we will add that surplus to the capital fund, and if we have deficit, we will deduct that is subtract it from the capital fund. That is the first one. Second is, while preparing the balance sheet, okay, the closing balances of cash and bank will be taken to the asset side, and if there is any overdraft, again we'll take it to the liabilities side. So this point also is normal only. Okay, the third one is given as when assets appearing in the previous year balance sheet, that is opening balance sheet, should be taken to the balance sheet and the adjustments must be made accordingly. Okay, but while taking such assets, if there is anything which is purchased, okay, which is the same asset is being purchased again, in that case we will add that purchases of the asset to the respective assets, and if we have sold any asset, that particular asset must be subtracted. The amount whatever we have sold must be subtracted from the respective asset account. And also depreciation as usual should be adjusted. Okay, when any new asset is being purchased or asset sold are to be found out by referring to the receipts and payments account. So when we write in the receipts and payments account, we do enter the capital expenditure and the receipts, right? So from there we can identify whether any asset is being purchased or any asset is being sold out. If that has happened, that case in your balance sheet we have to add to the respective asset if we have purchased, and we have to subtract if we have sold out. Okay, the fourth one is if there is any prepaid expenses or any accrued incomes, we have to show it in the asset side. This and all is normal only. Okay, and fifth one is outstanding expenses and income received in advance. These two will normally be shown in the liability side of the balance sheet for any normal organization also. And the sixth point is if there are any specific fund like what we saw like prize fund, tournament fund, match fund, these will be shown on the liability side separately, and if there are any receipts to that particular fund is to be added, and if there are any expenses then we will have to subtract it from the respective fund account. Okay, that adjustment will be shown only in the balance sheet, not in the income and expenditure account. Okay, and the last one is if there is any specific fund investment. So we saw in the previous illustration, right, illustration 15 we saw it. If there is any specific fund investment, automatically it should go to the asset side of the balance sheet. So this is the specification or important points that is to be noted when we prepare balance sheet for a not for profit organization. So the next illustration is talks about the capital fund, okay, which is we have to find the capital from whatever account amount we have here. Compute capital fund of Karur Social Club as on 31st March 2018. So as usual, balance sheet format we have to write balance sheet as on 31st March 2018, liabilities rupees, assets and rupees. We all know what all should come under assets, what all should come under the liabilities. Furniture, asset, so you have to take it to the asset side. Building, assets, so you are writing building, here they have written building as the first asset, building 40,000, furniture 50,000. Then they have subscription which is outstanding for 2017-18. This is subscription means what we have to receive. So something we have to receive is outstanding means we call it as accrued. If you remember last year we read in the 13th chapter, okay, accrued. So this accrued subscription must be written in the asset side, and anything which is received in advance must be written in the liability side. In loan borrowed, it's a liability since we are borrowing, so it is a liability, so you take it to the liability side. Investments is an asset, 20,000, so they are writing investments in the asset side. Cash in hand, cash at bank, both must be written in the asset side, so you will write 4,000 and 6,000. Okay, after this you will have to add up all these value, that is all the assets. You have 1,30,000 in your asset side. From this you will have to deduct these two values, since this will not be there. Okay, while writing this will not be there, but you have to leave some space for writing capital fund, then start off the writing the remaining liabilities. Okay, so after writing this, you have a total of 1,30,000 towards the asset side. So write since that is the highest amount, you will write on the both sides as 1,30,000. Okay, then you have 15,000 here, so 1,30,000 minus 15,000, you get 1,15,000. This is your capital. You all remember last year in your 11th standard itself you would have read in accounting equation approach, assets is equal to capital plus liability. So these are your assets, you have your liabilities, find out your capital. Okay, this is your balancing figure. This is how you have to calculate the capital fund. Also you have here the formulae. Opening capital fund is equal to assets at the beginning minus liabilities at the beginning, which means assets minus liability will give you capital fund. Okay.